Good morning. It's Friday, the 3rd of May, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai, India's financial capital. Our top stories and themes for the day. The stock markets hold gains, mid-cap index hits an all-time high, and global cues stay positive. The OECD raises its growth forecast for India for this year at 6.6%. After a spate of crackdowns, the Reserve Bank of India pulls back, lifts restrictions on Bajaj Finance's products which were halted in November. Why India's small and medium enterprises will have to work harder to get their payments on time. Unprecedented heat conditions across the country again, record temperatures in eastern India, and its heavy rains once again in Dubai. The Air Transport Association, or IATA, lashes out at Germany's increase in airport taxes.
This is a core report with Govindraj Ethiraj.
Markets hold gains. The mid-cap index is at an all-time high. The Indian stock markets were mostly range-bound in Thursday's trade, ending finally positive or up. The US Federal Reserve held on to interest rates as was expected to on Wednesday, and on Thursday overnight Wall Street was holding in positive territory, thus setting the trend for Dalal Street on Friday. Now, back on Thursday, the BSE Sensex closed at 74,611. That's up 128 points, while the Nifty 50 ended at 22,648, up 43 points. Global and domestic cues are positive at this point going into trade on Friday. On the other hand, the BSE Mid-Cap Index hit its fresh all-time high of 42,564 during the session on Thursday, and it closed about 0.9% higher at 42,503. The BSE Small Cap Index closed 0.29% higher at 47,451. Remember, not too long ago, the Securities and Exchange Board of India was ringing alarm bells about both the mid cap and the small cap indices and even asking mutual funds to start looking at their portfolios closely. All of this would mean that most standard stock portfolios, which go beyond the index companies, would have done well in recent days and perhaps would continue to, at least for the coming few days. Speaking of portfolios, if you were to use Adani Ports as a contributing proxy to the overall portfolio of merchandise trade in India, then things are seemingly going well there. Of course, traffic can also divert to different ports, particularly if some are more efficient or convenient than the others. So overall numbers, that is for the country, may not have grown as much as the traffic in one port has. So Adani Ports and Special Economic Zone, or APSEZ, also India's largest private sector port operator, posted a 76% rise in its fourth quarter profits on Thursday thanks to record cargo volumes at 109 million metric tons, or MMT, for the January to March period. Revenue rose 19%. Now, Adani Ports runs about 13 ports and terminals in the country, including the largest container handling port in Mundra in Gujarat. These ports handle, according to the company, more than 25% of India's cargo volumes. Now, one reason the markets were strong on Thursday, that's the stock markets, were falling oil prices earlier in the week. So, just a quick reminder, Brent crude is still holding below $85 a barrel, or around $84.30, which means that there is still hope for some peace in the Middle East. OECD raises India's forecasts to 6.6%. The Organization for Economic Cooperation and Development, or OECD, has raised its growth forecast for India by 40 basis points to 6.6% for FY25, fiscal year 24-25, or the current year. The OECD has said that buoyant public investment and improved business confidence are expected to propel India's gross domestic product, or GDP, growth, according to the Business Standard. It also says, that's the OECD, that domestic demand will be driven by gross capital formation, particularly in the public sector, with private consumption growth remaining sluggish. Moreover, it argues exports will continue to grow, especially of services such as information technology and consulting, where India will continue to increase its global market share, supported by foreign investment. The OECD is an intergovernmental group of 38 high-income economies, and the forecast was part of its latest economic outlook, where it also acknowledged that private consumption has been less vigorous in India, confirming the preliminary findings from the latest Household Consumption Expenditure Survey. The outlook also says, and all of this is useful because it puts things together, that some high frequency indicators, including on expressway bills, toll collections, and new vehicle and scooter sales, are suggesting increasing activity. Other indicators, such as digital payment transactions and cement output, remain relatively flat, the outlook said. The Reserve Bank of India is starting to ease off for now. After several months of crackdowns on a wide variety of financial sector players, beginning with Bajaj Finance in November 2023, on to Paytm and then GM Finance, and more recently Kotak Bank, among others, the Reserve Bank of India appears to have responded to the corrective measures undertaken by the companies it had cracked down on. More specifically, on Thursday, it lifted the restrictions on Bajaj Finance's e-com and online digital Insta EMI card with immediate effect, according to an exchange filing by Bajaj Finance, who said it would now resume sanction and dispersal of loans in these two business segments, including issuing EMI cards. Bajaj EMI cards were and presumably are quite popular with shoppers, particularly in consumer and white goods chains like Chroma, who usually have a Bajaj Finance executive to help you take a loan at sometimes prices that cumulatively are less than what you would have paid otherwise. All of which, along with many others, adds to the rising consumer debt problem in the country, which is, of course, a separate cause for concern. The Reserve Bank of India had in November barred Bajaj Finance from sanctioning and advancing loans under the two lending products, that's Ecom and Insta EMI card, thanks to what it called non-adherence with existing digital loan guidelines. Heat waves grip the country again. Eastern India hits record highs. The eastern parts of the country experienced their hottest April on record, killing at least 9 people, according to Reuters. One reason for low turnouts at the general elections on right now, as we've been discussing, and with analyst and Seawater founder Yashwant Deshmukh earlier in the week, has been abnormally high temperatures. The mean temperature in eastern India was 28.12 Celsius in April, which was the warmest since records began to be kept in 1901. With experts blaming a combination of factors, said Reuters. Meanwhile, Kerala closed all schools and colleges until Monday thanks to scorching temperatures, urging people to limit exposure to the sun and take care to prevent wildfires, according to Reuters again. The Indian Meteorological Department, or IMD, had earlier forecasted a higher number of heat waves this summer. The impact of all of this will be seen on productivity, lives, and livelihoods, particularly for businesses like construction that are exposed to the elements, and of course, higher inflation, also because of possible impact on crops and food products. Temperatures in the state capital of Kerala, that's Thiruvananthapuram, touched 35 degrees Celsius, but the IMD said it felt like 46 degrees Celsius thanks to high humidity levels. The IMD also says that there is more heating in a El Nino year, the climate pattern which usually is the opposite of La Nina, which we are seeing this year, which typically will bring higher rainfall to the country. The impact of heat waves and extreme climatic conditions are being felt across the world's agriculture zones as well. I've just referred to India, and we'll come back to that in coming days. But 2 consecutive years of scorching heat in Spain have limited olive harvests, culminating in an unprecedented price rally that has stunned consumers and industry veterans alike, says the CNBC. Now, this matters because Spain accounts for more than 40% of the world's olive oil production, making it a global reference for prices. Extra virgin olive oil prices in Spain's Andalusia hit a record high of 9.2 euros per kilogram in January. Olive oil prices have since cooled, partly due to an uptick in production estimates and beneficial rains in March and April. Speaking of rains, it's pouring in Dubai again. Flights were cancelled, intercity bus services suspended, and schools remained closed in Dubai thanks to those adverse weather conditions in the United Arab Emirates. The Khaleej Times said an orange alert was issued on Thursday as heavy rains and thunderstorms lashed the desert city. The National Center of Meteorology has said the weather scenario was not anticipated to be as severe as what the city encountered on April 16th, which brought everything, including flights at Dubai airport, to a standstill and leading to backlogs lasting days. The April 16th rains were the heaviest rains on record since 1949. Why SMEs, or small and medium enterprises, have to solve for problems of the future as well. India's SMEs have a tough time getting paid for the work they do because many large companies, or some large companies at least, often delay payments. The government recently came up with an income tax linked amendment which penalized companies who delayed payment to small and medium enterprises. Now, the rule unfortunately seems to be having an adverse effect, with large companies scaling down or trying to scale down their exposures to SMEs. So SMEs unfortunately have to solve 2 or 3 problems at one time now. Apart from fighting to keep their balance sheets safe, they also have to now think about being, for example, environmentally compatible because their principals, in many cases overseas, have to. For example, if you supply to Walmart or a clothing brand overseas, your production process in India has to be environmentally sustainable as well. All of this costs money. I spoke with Sankar Chakraborti, Managing Director of Acuité Ratings, which was founded in 2014 by a clutch of banks including ICICI, Citi, State Bank of India, United Bank of India, and Dun & Bradstreet. I began by asking him what SMEs could do to better gear up in these times.
We all have seen that sometimes regulatory push or a policy push can have undesired effect also. However, what is important to understand here is that the timeliness of payment from the large buyers of these SMEs has been a very serious challenge for these SMEs. So what the government came up with is a step in a very strong step in a situation where other initiatives or awareness building and those kind of software things were not working, and that's why government had to come up with this measure. However, there are other things that are also happening in the industry. One of the great positive development that has taken place is the trades platform. And if the trades platform and essentially the invoice discounting services, there are a lot of companies who have started offering it. The SMEs should, try to find out how they can take advantage of the trades platform. The trade platforms are growing very, very fast. It has solved, for at least a segment of SMEs who are more organized and who are supplying to the large public sector companies and large entities. They are getting benefit of that. So I think that is one part of the story. However, like, for example, I'll give you one example of a subsidy. So when the government used to give a subsidy to our SME ratings business, we became dependent on it. And then we realized that, businesses who are dependent on subsidy forever can really not become sustainable in the long run. Similarly, any government push supporting the SMEs is a welcome move, but the entities themselves will have to, they cannot say that, they will be dependent on this kind of push forever. So they will have to take initiatives on their own. And a classic model to follow is the Michael Porter's 5 forces model. If you don't have products of a certain quality, if you don't have bargaining power with the buyers, you are always going to suffer from these kind of challenges. So SMEs has to look at their own strengths and weaknesses, their governance standards, and now more than ever, they have to look at their sustainability or ESG footprint. There are a lot of large companies. On one hand, we are thinking that companies are not really supporting their suppliers. But on the other hand, there is a serious lack of number of suppliers in every possible sector who are capable of taking up ESG and sustainable practices. So going forward, this is going to be a big opportunity for SMEs. The SMEs who will adopt these practices, larger companies will be more comfortable buying at favorable terms from them.
So you're saying even as they solve the problems of today, they should be preparing for problems of tomorrow, which is also today, which is ESG. Okay, so you run the SME Ratings Association of Agency of India, and you have about 54,000 companies rated until this point. What were the broad takeaways, Shankar, from this? Not to compress it too much, but if you were to look at these 54,000 companies, what are the things that jump out at us?
One thing is that we have a lot of misconception about these companies. There was this perception that their balance sheets are all cooked up and you cannot really trust them. I think the conclusion is that as long as they have the auditors numbers ready, yes, there are creativity involved, there are some amount of tax avoidance that drives their internal policies. Overall, if you look at it, there is a lot of data that is available which can be worked on and which can be trusted. So I would say that these companies are not really doing very bad. I'm talking about the relatively better quality SMEs who have the courage to come forward and get the rating. The rating SME universe is very large. Some estimates say that the number of SMEs may be 65 million in the country. But many of these companies are actually own account enterprises where these are small kirana store or whatever, where only the owner is the employee of the company.
What would be the size of company that would get rated roughly
Between 2 crore to 50 crore in turnover,
in your case?
and about between 2 crore to 25 crore in bank clients. So that is the universe. So if you look at these companies have the aspirations right, they have good quality buyers. A lot of these SMEs have very fantastic stories. I remember this lady who lost her husband and went into a very serious family crisis in terms of financial losses. And she started a SME business at the age of 53. Now, when I met this lady, she was 65-year-old. But in 10 years' time, 10 to 12 years' time, she has built a very nuanced, very fine kind of a business.
What industry was this?
This was a auto parts manufacturing entity based in Gurgaon. Now, if you look at each of these SMEs have a story to tell. Somebody is into, three generations of auto parts business. Somebody is just a startup. So it's much more diverse than the larger companies where the rules of the game is very, very similar. And all of them have struggled in the initial phases. Everybody has a story to tell, fantastic opportunity to work with them. However, what we can also say, there is a need for investment in governance, in corporate governance with these entities, because a lot of times they don't have access to the right advisors, right consultants, and professionals who can help them in this kind of matters. So corporate governance is one thing. And of late, what I am noticing is that the world is very quickly moving towards sustainability and ESG. And if you look at companies like Walmart, who source a lot of their products from India, in fact, all OECD countries are moving towards sustainability. And the buyers from those countries want to ensure that they don't deal with the wrong set of suppliers. As you are aware that there is this concept of scope 3 emissions, where the entire supply chain has to be compliant with emission norms. So therefore, it is very important that these people, they also adopt these practices to be able to sell to these larger companies and to be able to get the right price and get the payment on a timely basis. So this is something that will transform this segment. And I think there are literally hundreds of large companies that can emerge from this universe very easily if few things are done right.
Right, Shankar. Thank you so much for joining me.
Thank you. Thank you so much, Govind.
Catching a flight to or via Germany, look for options. Flight prices from Germany to foreign destinations will see a price increase from May this year. Germany is increasing its aviation tax for passengers taking outbound flights from its airports as part of an initiative to fill a 17 billion euro deficit that surfaced in its budget this year. The higher taxes, like in all such cases, are passed on to passengers. The International Air Transport Association, or IATA, has sharply criticized the increase in these taxes, which it said will weaken the German economy and damage aviation's ability to decarbonize. German taxes on flying increased by 19% to between 15 euros and 70 euros per passenger, depending on which route, short or long. IATA said the tax will make Germany less competitive in key economic areas such as exports, tourism, and jobs, and will further affect Germany's air transport recovery from the pandemic, which in any case is one of the slowest in the European Union. Germany's international passenger numbers, for example, are still 20% below pre-pandemic levels. IATA's Director General Willy Walsh said that when Germany's economic performance was anemic at best, denting its competitiveness with more taxes on aviation is policy madness. The government, he said, should be prioritizing measures to improve Germany's competitive position and encouraging trade and travel. Instead, they've gone in for a short-term cash grab, which can only damage the economy's long-term growth. And he also said that the German government appears to have an unhealthy obsession with aviation taxes. On top of increasing the passenger tax, it's also in favor of a European jet fuel tax, which will make it even more expensive to do business in Germany or for families to go on a holiday. Are IPL revenues falling? The average revenue of all Indian Premier League or IPL teams in financial year 22-23 was 23% lower than the pre-COVID-19 year, that's FY19 or 18-19, according to a report quoted by Business Standard speculating that the cricket franchise and tournament is reaching a saturation point. Business Standard quoted market intelligence platform Private Circle saying that if we account for inflation, the drop in revenues becomes much sharper. And this sharp decline in revenues could indicate that the market for the IPL is reaching a saturation point, according to that report, which attributed it to several factors such as oversaturation of cricket content, changing consumer preferences, or competing entertainment options. The data in the report showed that in 22-23, that's the year, Delhi Capitals had the highest revenue at 367 crore, Gujarat Titans at the second spot at 360 crore, and Mumbai Indians at 359 crore. And all these figures were lower compared to the top three revenue-generating teams in that 18-19 year. The average revenue for all teams was about 394 crores in 19, and this fell to 307 crores in 23, though the report said the incomes from sponsorships has increased for all teams. Now, all of these numbers, it's my sense, may be a little new to you. That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.